This is Justin Amazon on Thursday, August 30th, 2018. And we're looking at the pre-market, which is pulling back slightly. Not really into a clear level in here. There wasn't really a clear point where we pivoted. Maybe here at the high, right around 1997. Maybe down here, 1988. Maybe this high that we kind of went steady on here. Right around 1990. I like 1990 because that's a nice round number. The low of this wick was a little bit above 1990. So, maybe 1997, maybe 1990, something like that. Didn't quite get down to 1990 here. Looking at the 1997 level. Putting a little bit of support there. Maybe not. It's kind of hard to tell. So let's get into the day and see what prices we interact with. Right away, we shoot up to a new all-time high, almost up to 2010, and gets sold off a little bit here. Would have been pretty difficult to trade this unless you were able to do something pre-market, getting in with a break above this level, but that would have been a really aggressive trade, and had it moved against you, it probably would have stopped you out much further away than where your actual risk was. That's where you'd want to have something set up to get in, maybe above those levels, and then a stop down below the pivots we were just looking at further down, and then just scalp it, take some profit as it's moving up, and get a little bit of gain. So this first candle is a bullish candle, has some selling, but at a huge volume, 329,279 shares traded in 5 minutes. That's a lot. That's more than we had the last two opens in the first 5 minutes. So a lot of volume on here. Right after that, we immediately pull back. Pull back through the 1990 pivot, if you want to call it that, a little bit further even. And there's, I guess, some of the lows down here, 1987, pretty close to 1987. So we're really close to actually the lows here. I guess I can see that now. Yeah. So we had one up. We had when we came up to 1987, had a really small doji right on it, kind of like that value. All right. So 1997, good point, good price to come back down to. Let's see if it maybe hangs out in here and bounces, breaks down. I don't know. We'll see what happens. Slight bounce. Okay. Another slight move higher. These are just a bunch of inside candles that are getting a little bit smaller. I like the small ones here because they're like only a few dollars wide, and you can even take it down to the low of the day or take it to the high of the day and see what you get with that. Now it's starting to look like it's going to break out. Okay, there it goes. Now it's breaking out. You got to the high of the day. Maybe you took off a little bit if you're in here, breaking the pre-market high, and stop you down here. Maybe you're turning up your stop. You're up to the high. Take a little bit off. Keeps on going. Doesn't even pull back to this price here. Continues on up. Obviously, we put in a high of 2025.57 and have a stair step way up here. So we have 20 minutes of just up, down, chop, and then 2020s. And then we start to pull back a little bit. We pull back really close to this 2010 price, where it almost made a high here. Almost get into it right here, which is essentially a pullback to that breakout. So we broke out, we retested an old resistance, new support, and there we go. We actually got into it right there. So 2009 is the low, and 2009.21, and the high here was 2009.67. So you could have actually had a trade set up. Now I don't know where your stop would have been because anywhere here would have still been pretty tight. But maybe there's an option we could look at to say, hey, I'm going to get in on a pullback to the similar level and take it back up to the high of the day, something like that. And had a nice little move up, starts grinding higher. I really like these two inside candle, or one's inside the other, and it's right below the high. This should pop if we got the bullish momentum to carry us through to a new all-time high. If it doesn't, this is a great place to have a really tight entry to go bearish here by above the high of the day. So maybe going bearish 2020 or 2021 by 2026, something like that. It's only a few dollars. Another inside candle. It looks like it's moving a little bit higher. Okay, good. It's breaking out. It's going. It's not really going very fast. Another inside candle, and there you go. Pullback. It's not working. It should have gone higher. Should have pushed higher quickly. Excuse me. It's definitely not doing that. It's breaking down. So this is where you could have been getting in bearish, saying, okay, I'm at a resistance, a known resistance, because we just did it earlier. We could be pulling back a little bit more. And it does. Puts in a flag, pulls back down, comes almost into the 2010 price. There we go. Now we broke below the 2010. Let's see if we can hover around here a little bit longer, right at 2010, and then break down some more. Okay, we go down, back up into it, break down again. And if you weren't in any of these here, definitely could have been in this one where we actually broke down below the level we pivoted on, put a doji on it, and an evening star reversal, but you could have been getting in with a break below that small candle there. Hang on just a sec. All right, sorry about that. So we were talking about this candle. You could have gotten in with a bearish move down here and looking for it to get to probably the 1987 price, and it doesn't quite get there here. Maybe it'll roll back over, but 2,000, a nice round number. I always like working with the round numbers when we're trading in something so large here, and that's where we end up on the day. So we had a nice move from essentially about 2,000 up to 2025 and back down to 2,000. So, in a nutshell, that's what Amazon did today. And so if we think of it that way, just kind of the big, $25 move, $25 move, let's go look at some options and see what you could have had what you could have gotten set up. Because right here, we're pivoting right around 2,000. And then that break, either with this candle or the pullback on this one, could have been getting in bullish with a stop down here for a really nice gain. The challenge is that when you look at the calls, this is the 2025 call expiring tomorrow, and it doesn't quite get not quite under $100 risk. So you would have probably needed a little bit larger or going out a little further. And it's challenging to do that because expiration is tomorrow. I don't like being too far out of the money, because if you're too far out of the money, you're more or less making the assumption it should get there. And it's harder for it to do that in that single day. Now yesterday with 3 days, Wednesday, Thursday, Friday left, we had a huge move. Anybody in the 2,000 option strikes going with the calls for being bullish would have worked great because you had 3 days and it moved really well and everybody should have been up. But today, with only 2 days left, if you're in the 2025, it could work. If you're beyond that, it just had like a $50 move. Is it going to do it again 2 days in a row? Obviously it didn't, but it's more of a challenge to say, okay, yeah, it should. It probably won't, so don't make the assumption that your option has to get into the money. But that's essentially what we're doing with the 2025. We're saying, hey, we should get close, and what's that going to mean? So if you got into the 2025, got in, like 4 by 3 or 4 by 250, if you got in at 4, waiting for it to break out, and then you got in on that little wick, you could have set your stop at 3 and it would have worked. Now, it's not a guarantee it's going to every time. The other thing you could have done is on this candle at 9:10. Let's see what time that was. Let me zoom in on this so it's easier to see. On this candle, nope, 9:10. This is the pullback candle. Okay, it broke out. It pulled back. Your stop's down here. That could have worked for getting in on this candle for, let's say, 3 and a stop down at 2. That would have worked. That would have been a really nice trade. I have previous days on here, and if we just look at yesterday's, you can see there was a bit of a support here right around 3. So having a trade set up to buy at 3, after a little bit of a breakout here, that could have worked out. Could have been nice. But this would be your first signal saying, oh, no, it might pull back a little bit more. And then it would have been really hard to buy the low of the day on that move. But if you were watching the 1987 price and saw that it came into a little bit of a support here that correspond to that today, I mean, it's really hard to get the exact value of the option when you're looking at the stock price. But anyway, let's say that it worked out. You're in 3x2 or 350 by 250, something like that. You can take a little bit of the high of the day here on this candle, or high of the day here. Would have, if you took all of it, that would have been like 2R. If you took a little bit, then you're just trailing up your stop. And when this gets in the money, that's when you got to get out. I'm not going to move. It did it very quickly. Just get out. Whatever you can get for it, get out. You probably set up a trade to get out at 10, had a couple opportunities, maybe 10, 11. Probably didn't get out at 12, probably not at 12.38. But going, let's say, from 3 up to 11, that's 8R. That's a great move. And then this pulled back, and it had some wider ranges on these 5-minute candles, so that would have been hard to trade. But as it pulled back into this high, it actually went a little, I'm sorry, not that high. The stock high here, you would have been looking for, a pullback into that same level. Didn't quite get there on these candles, got there on this one. That would have been the 1035 at 1035, and that would have been this candle here. And that is pretty close to yesterday's highs in here. We could have got a set up like 550 by 450, and that would have worked today. Just like that was, basically the highs in here. That was your essentially what was your old resistance became new support today. And that moved up again, up into 10, almost maybe. If you got in 550 by 450 here, you're probably taking some out when you see these upper wicks here, like around 850. Oh, that's, great extra move. You got out at like 950. But the price is just kind of trudging higher and getting back up to this level, but the option is nowhere near it. The option needs a couple more bucks to get there, and it's not doing it. So as this is developing at a resistance and not breaking out after this candle, you can definitely be looking to have a little more of a consolidation, some higher lows, lower highs or relative highs. And this is a rollover here. So this was not the initial place to get in bearish. It could have been, but let's say you got in bearish after these candles. You have this flag, and then it starts to break down. You actually make this doji here, and then you break down from there. Let's say you're in at the worst price you can get at the 1230 candle, going bearish. 1230 candle, going bearish. That would have been, I'm looking at the 2000 strike put. The worst price you could have gotten filled here is 272. Let's call it 275, just for some round numbers. The low of this option was 2. This you could have traded 275 by 175 and just held on to it till it was back up at some of these highs in here during that consolidation at the open. You could have gotten out at 13. Let's say you got in at 3 by 2. It didn't even come back down here and touch 2. You could have gotten in for 3 way over here almost. Maybe if you had a limit order, it could have worked. And it maybe would have filled if the market maker was looking for filling an order right into this candle. But that's 1:05 p.m. 1:05 p.m. is when this is happening. It looks like it's bouncing. Didn't quite come into our 2010 price. Didn't quite come back down to that. Looks like it's bouncing. People are getting embarrassed, thinking, okay, we're going. We're going to go on up again like we did yesterday. But the signals are already in. Lower high or relative high. A really large breakdown candle. A retest of the breakdown. Starting to break down more. This looks more like an evening star reversal here. 4 bearish candles in a row. Needs a little bit of retracement. Here's another flag, and then you're back up now to this candle, which was a high wave candle, and you just retested that price from below. So that's your new resistance. Old support here becomes new resistance here. This is your ideal place to get it on the low of that candle at 105, and the low of that candle, what we're just talking about, is this one. The lower there is 305. So over here, you could have had a setup going, okay, I'm gonna not even get on that candle. I'm gonna get in 4 by 3. and you get in on this candle, a limit buy, sorry, a stop limit buy for $4. Maybe a little bit of room in there, maybe 4 by 375, something like that. With a stop down here at 3, that would have filled. That would have ran up really quickly. If you got in at 3 and you're already at 9, 10 minutes later, take something out, because then it came way back here down to 5 and you're at like 2R, and then it rallies even higher. But if you weren't looking to exit here, that would have been the lows of these candles, which is where it was pivoting. So that's actually a pretty good level, around 850 or so. Pulled back, could have re-entered here when it came back down to almost there, but really into this range. And then it rallied again into the other end of some of these candles. So it went to, let's see, this one, and then went to the low of this one, then the high of this one, and then came all the way back down here and just pivoted right around that 2000 price on the stock and right around our low on the option. So that's what's going on in the puts as this is happening. So I'm going to talk through some of this stuff next week with a friend that wants to get better at trading bearish, being, I think, directionally bearish on something that's moving so strongly bullish for just a short-term trade. And so just reading these candles, I mean, I've hardly even talked about, or I don't even think I talked about the 21 exponential or the 5 exponential. I'm just looking at the candles and the lines that they're in. And I didn't even talk about the squeeze. Just looking at candles and seeing the prices that the candles interacting with, you can trade this and you can look at the options and see how the options are moving. In the money, out of the money, mostly out of the money is what I'm looking at, because those are the ones that are going to move and actually give you the smaller risk and move really large. And tomorrow is month end before a holiday weekend in the US. And so I guess I don't really anticipate a huge move. If we get a small inside day candle, that actually sets us up for some more bullishness on Tuesday after the holiday. Tuesday, Wednesday, Thursday after the holiday. But we'll have to actually see what we get tomorrow and review that movement. And I'm going to have to draw some new lines in here, because I haven't drawn any new lines since we were way back down here around 1925. Now we've put an eye about 2025. So I've got $100 of lines to add in here, and I've been really hesitant to, because I was waiting for this kind of breakout. But now, we've got some key levels in here. If for some reason we get some selling off tomorrow because of the holiday, or into next week because of the holiday, being September already, look for a pullback into this line, 1925, because that is where we broke out from. There is this this consolidation. Then we broke out with 2 bullish gap and goes. We shouldn't really come back and retest this yet. If we do, I guess if we do, that would be just a very small signal that, hang on, don't be so bullish right now. We just hit 2000. We were bullish till that point, but now that we're there, we're going to chop around here for a little bit, and then if we break down, just be careful, be waiting until you get a really good entry and a really good risk to reward. That's what we're always looking for. Hope you enjoyed the video. This is Justin AMZN. Thanks.